With all the new construction in Denver, there are some seriously outrageous red flags that happen in new construction all the time, and you need to be prepared for them. What are they? Well, you are about to find out. What's going on, everyone? It's Lori Derrickson and Kayleen Zabadik, not pictured, but she will be here shortly from Colorado's Finest Agency here in Denver, Colorado. We're one of your top relocations teams here in the Denver, Colorado area. So if you are ready to move to Denver, are you ready to buy some real estate in Denver? Put those numbers into your phone and reach out. So you're not going to believe this first example I'm going to tell you. We are calling it the money grabber and false hope shocker. So let's break that down. What does that mean? So imagine this, you've been diligently house hunting with our team for quite a while, being cautious, for being thorough in our research for that perfect home, and you finally reached a point where everything aligns. The stars align, right? We've done our homework, you've crunched those numbers, we've haggled with those builders until we settled on a price, and then we go over the contract with you and them, ensuring all is in order before you sign that dotted line. And not just the signature, you're also laying down a substantial deposit, often as much as $25,000 to $45,000. So your money's officially out of your account and into theirs. This surely signals progress and a reason to celebrate after a long, taxing journey. So now we're under contract, right? Unfortunately, that's not always the case. And so here's the first shocker for today's video. You may think you're under contract, but you actually might not be. Sometimes a week or two later, you discover the builder prefers another offer over yours. Sure, you might get a chance to match this new offer, but the harsh reality hits you. You believed you were locked into a contract, yet you're not. So how can this happen? It turns out not all parties might have signed the contract, or even though you signed and paid your deposit, it does not automatically mean the contract is finalized. The sales consultant at the local office doesn't have the final say. They relay what their manager or builder corporation agrees to, but it's just a verbal at that point. It's not the legally binding contract. Moreover, remember, there's more than one sales consultant working in the community, often competing against each other. So imagine this even further. You've been busy discussing terms, signing that agreement with one sales consultant, but meanwhile, another consultant is engaging in that similar process with a different buyer for the same property. It's not supposed to happen, but it does. Despite your signed agreement, you don't actually have any claim to the house until the higher management, that corporation, signs off. And this can sometimes take a week or even longer. I've seen this in our recent case with one of our new construction clients. A week after the initial agreement, the builder informed us that there was another interested party, and our client had to sacrifice some of their earlier terms and negotiate concessions to secure the home. So this situation is unheard of in the resale market, where taking a deposit and then changing term later is not simply done. Having a realtor can be advantageous in these scenarios as they advocate on your behalf. However, even with our persistence, as we experienced a sales consultant, they may still procrastinate or delay that process. For example, during a transaction with one of our local builders, it took an agonizing 10 days, which is a long time when you don't, with uncertainty, to receive that signed contract from that builder or the higher up corporation. During this period, our buyer's deposit was tied up, leaving them uncertain about the status of their contract for the house. This kind of situation is rare in the resale market, but in the world of new construction, it's a reality that buyers should be prepared for. All right, so moving on, it's not like it's the only new construction shocker out there. So the next one you need to be prepared for. I'm gonna let Kayleen bring you this next shocker.
So the next shocker, we call this the engineering plot shocker. So again, you shop, you negotiate, you analyze, you pick a new build, and you pick the lot. And then you begin to realize this process can take weeks. It can even take months to find just the right one. So we negotiate with the sales consultant. We come to an agreement, right? Well, finally it feels like you can take a breath, relax, but at that very last minute, the sale falls through when the builder tells you the home model you picked out doesn't fit on the lot, or your backyard will be essentially non-existent. So you invested an enormous amount of time just to find out at the last minute. We actually did have this happen with one of our buyers who had settled on a gorgeous lot with amazing views of open space land right behind it, something they had been waiting for in Colorado for a while. And then last minute, right with the contract, literally in front of us, the sales consultant told us that the home footprint wouldn't fit on that lot. So here's what you need to know. Just because the builder's rep approves it and writes the contract, it doesn't mean that it's going to happen. The plot of land goes through an architectural design review and must be approved to show how it'll fit on that plot of land. And then I'm sure you're wondering, why would this even happen? It has to do with easements, utilities, and developer rules, and the kinds of things that you don't normally talk about with a sales consultant because one, they've either forgotten these factors until last minute, or two, they don't honestly even know about that from the very beginning. So we recently had a separate sale where we were told that all was in place and approved. Money had already changed hands, and we were in fact under contract, only to find out that the home would not fit on that plot of land. We have even had some clients know they need a 3-car garage, only to find out a couple weeks into the contract that that particular plot of land with that floor plan won't fit, and that they must have a 3-car garage after it goes under the engineering review. So sometimes it's not even the consultants. The developers just don't always share all of that information or really know the specifics until the engineering report is complete. So especially here in Colorado, when you're dealing with elevation changes, incompatible soils, and additional developments around that community. So here's the lesson. When you're considering a new build, always ask and know that there are additional reports that need to be done before anything is finalized. This is crucial detail and often is miscommunicated or overlooked by sales consultants, and not necessarily deliberately, but particularly the information won't be known until it's received at the corporate level. So it's important to recognize that the issue isn't solely governed by the builder's policies, but rather sometimes it involves the city or the building permit or those easements and setbacks. So this means navigating through various layers of bureaucracy to obtain accurate information. With multiple levels involved, there's significant risk of communication breakdown, which results in a final message to you being distorted or incorrect. Therefore, it's essential to be proactive. Always inquire and do so repeatedly to ensure that you're getting correct information. Now, before we get to the all-important shocker number 3, I'd like to quickly remind you about our big green box promotion in the year 2024. So in addition to having us represent you on your new build home or an existing home purchase here in the Denver area, you get to choose from 6 different luxury closing gifts, which range anywhere from an 86-inch LG TV to big green egg, barbecue smoker, maybe even 9 months of home cleaning. So if you are thinking of making that move, we'd love the opportunity not only to represent you, but to gift you with a luxury closing gift in the year 2024.
So are you ready for shocker number 3? We're calling this the rate block. So to grasp this concept, let's start by understanding what a rate lock is. So David McMillan from Bank Rate describes it as a commitment from a mortgage lender to hold a particular interest rate at a certain cost for a predetermined period. Well, why would you want this? NerdWallet outlines the advantages. A rate lock means your loan interest rate remains constant regardless of economic fluctuations. This is appealing because it allows you to predict and plan your future monthly payments. However, NerdWallet also highlights a caveat that you are shielded from rising rates. You won't benefit from any drops either. So Gina Freeman from mortgagereport.com illustrates a scenario that you want to avoid. She points out if you lock in a mortgage rate and then the rate declines, you can't simply unlock your rate to benefit from the lower interest. Imagine you're at work and your colleagues are discussing a significant drop in interest rates. If you're hoping this means your payment will decrease, but instead you find yourself locked into that higher rate we talked about. That's a frustrating situation, right? Even if you have an excellent credit score like in the 800s, you're still stuck with the interest rate that's higher than the current market rate. So Freeman emphasized this by saying the deal is binding in both directions. If rates plummet, you can't expect to undo your rate lock and get a lower rate from your lender. In short, once you've locked in your rate, there's no going back. There are methods to secure a lower rate, but they involve certain trade-offs. Gina Freeman suggests inquiring about a float-down option with your lender. This agreement allows you to access lower market rates after you locked in a rate, but it comes at a cost. According to Freeman, this typically ranges from 0.5 to 1% of the loan amount at closing. For example, on a $300,000 loan, a float down might cost you about $1,500, which is about 0.5% of that loan. In some cases, especially for larger loans, like at a $600,000 mortgage, this fee could reach 1% of the new loan amount, amounting to almost $6,000 expense to benefit from that one-time rate reduction. This additional cost at closing can be quite unexpected sometimes, leading to a financial surprise. The alternative, if you've locked in a rate and then the market rate falls, is to cancel your loan application and switch lenders. This means leaving your current lender and starting with another lender that offers a better rate. But the downside to this is the time invested into beginning that process again, potential delays in closing, and additional costs like paying for another appraisal. Freeman points out that these options, opting for a float down or switching lenders, can come with significant benefit and risks. You're either looking at a substantial float down fee or facing delays, extra paperwork, and potential other costs. So locking in a rate or opting for a float down both incur costs. The issue of rate lock surprises is relevant when you're purchasing a pre-owned home or a new construction, but it's particularly challenging with a new construction due to the longer and less predictable closing times. For example, when purchasing a ready-to-move-in home from a builder, unforeseen factors such as adverse weather conditions, delays in material supplies can push back the closing date. This uncertainty puts you at a greater risk for experiencing substantial fluctuations in those interest rates. So up next, we're going to talk about the convenience clause shocker, and Kayleen is going to talk to you about this one.
So next up, let's talk about the convenience clause shocker. So this type of clause is quite common in new construction contracts and poses a significant risk to buyers. So to illustrate, let's look at some of the examples we've encountered in builder contracts. Many corporate build contracts state, seller may terminate this contract for seller convenience or any and no reason at all. It also specifies that the buyer has the right to enforce the contract. A similar clause may read, the seller may terminate this contract for any or no reason at all for seller's own convenience. These clauses aren't just theoretical problems, they have real-world impacts. They warned potential home buyers after a builder canceled their contract just a day before close on what was supposed to be their dream home, leaving them with no legal recourse. Jason Friedman, an attorney quoted in the Box 4 News article, starkly described such contracts as an agreement to hold you hostage, warning that signing one could leave you without a home. He pointed out that unlike contracts regulated by the Real Estate Commission, which offers protections for both buyers and sellers, builder contracts often leave buyers exposed. These contracts are drafted by attorneys who prioritize the builder's interests, not the buyer's. As unbelievable as it may seem, this is a reality in the housing market. It's crucial to have someone on your team who can identify and advise you on the convenience clauses before you sign that contract. So our last shocker is escalation, and I'm going to turn this over to Lori.
Shocker is escalation, like we talked about. So understanding the pitfalls of escalation clauses in a contract is crucial, especially since new home construction builders are actively advising against them. Take a local Denver builder, for instance. They've highlighted the risks associated with escalation clauses in an article. Essentially, these clauses allow the price of your new home to increase if the builder's material costs go up. In simple terms, even if you sign a contract agreeing to a set price, the builder can hike up this price in response to their own rising material costs. And these aren't just minor adjustments. Buyers who've agreed to escalation clauses often face a nasty surprise at closing, and the price of their home could have skyrocketed by tens of thousands of dollars. This not only disrupts your budget, but could also mean you no longer qualify for your mortgage. To illustrate, let's look at a specific example. We came across an escalation clause in a local contract stating, should there be more than a 10% increase in price of any construction materials compared to similar materials the seller bought the home around at the same time, these additional costs may be passed on to the buyer. This highlights the importance of diligence of such clauses in contracts. You must be aware of them. So when we inquired about the escalation clause with the sales consultant, her response was that having been in the industry for many years, she's seen this clause in most builder contracts. While it's true that such clauses exist, fortunately they're honestly not that common as much as she suggests. However, it's crucial to be well informed and cautious when a sales consultant downplays something like an escalation clause. Remember, there's no need to rush. Sales consultants often try to expedite a sale by claiming there's limited inventory or special offers expiring soon. So make sure to be aware of any escalation clause and always go over this when we represent you during that new build process. Builder reps are skilled at creating a sense of urgency, trust me, and it can be challenging when you think you found your ideal home or lot and emotions are in play. But it's important to take a moment to take a step back and think about what you're purchasing, one of your largest purchases of your life. So we here at Colorado's Finance Agency are here to assist, or not only here to assist, but we also can only do it effectively if we're given enough time. So make sure to reach out to us. So sales consultants might prefer a quick decision because home builder contracts often contain clauses that can be disadvantageous to the buyer. Under pressure, you might miss crucial details in that fine print. So it's essential to take your time, reach out to us so together we can thoroughly understand that contract. So my recommendation is clear. Regardless of the pressure put on you, pause and take a moment and sit down with us to comprehensively examine that contract. There's a chance you might miss out on the house or the lot you're eyeing, and while that's disappointing, remember that Denver has thousands of new construction homes. It's better to avoid making a rushed decision you might regret or not having anyone on your side to help represent you. So keep in mind, once your deposit is made, it's highly unlikely that you'll be able to retrieve it. So if you're thinking about moving to Denver, whether that's an existing home or a new build, reach out. We help people make that move daily. Absolutely love it. We make that move as seamless as possible and look out for your best interests as a buyer as you make that move here to Denver. We pride ourselves on getting our clients into homes with great equity here in the Denver area. So you know what to do, as we always say, put those numbers into your phone and reach out. For now, we are out from Colorado.